storied business publication Forbes recently disclosed plans to go public on the New York Stock Exchange. The 104-year-old publisher will merge with a SPAC called Magnum Opus, putting the company at an enterprise value of $685 million. While you may know Forbes for its glossy magazine, of course, they are known for many other things, such as newsletters and the 30 under 30 list. Let's welcome in Forbes CEO Mike Federle to talk a little more about the company's debut. Mike, good to see you this morning here. So what's the pitch to investors?
Yeah, thanks, guys, for having me on. Good to see you, too. The pitch for investors was pretty simple. It's a strategy of what we call closing the gap, and that's the gap between our enterprise value and this much bigger brand value that we have. And the way we're going to do this is through consumer conversion in terms of converting this very large digital audience that we have built into segmented audiences that we can then sell very specific subscriptions and memberships and products to.
Mike, why do you think that gap exists? Because that was interesting, an interesting note you put in the investor presentation, the gap between the brand value of Forbes, which has been around for some time, and the enterprise value. Why do you think that exists?
Yeah, well, Forbes, I've worked on dozens of brands in my career, and Forbes is really a remarkable brand, very unique in its brand elasticity. It has potential to reach and really make an impact in audiences across a lot of different categories. If you're to ask 100 readers of Forbes what it means to them, you might get wealth, power, business, investing, rich, luxury, all these different terms. But it really distills down to success, and the word is success. And wherever there's an emerging business class around the world, there's an opportunity for Forbes to go in. And we've done just that with about 40 licensees around the world. And so as a result, our brand has this really gigantic outsized value to it that now our goal is to make the business to be as big as the brand.
Hey, Mike, it's Julie here. I believe you guys put your content relatively recently behind a paywall. Can you talk to us about that decision and how many paid subscriptions you have and how much you expect that to drive revenue?
Yeah, we actually, we experimented with a very limited metered paywall. And this strategy, I should say right up front, is not a hard paywall strategy. We are big believers in the ad market, and the ad model is going to continue to grow. And as we add data and analytics, our first-party data platform, we're able to increase the value of that advertising. So we're bullish on advertising going on. But what we're doing is not a hard paywall, but creating these premium products and experiences. And this is going to be driven by, again, the data and analytics that we're able to produce as we begin to segment our audiences. And we've already begun to do this, and we've already begun to see good results on it. In terms of your question of number of, we have tens of thousands of subscribers, but that's really on this limited paywall. And that's really, again, was more of an experiment to see how we could begin to segment certain sectors of our audience and create that subscription revenue from kind of an old model subscription of just a paywall.
Gotcha. And speaking of old model subscription, we were just showing the stats that you guys have 500,000 paid print subscribers, which in this day and age is an impressive number. Do you expect that number to stay where it is, considering we're sort of seeing the secular decline of that kind of a business?
No, it's interesting as you talk to people around the world, again, a testament to the brand is people will often refer to us as a magazine company still, and that's great. The magazine remains an important component to our mix, but it's only about 10% of the revenue. So we're 90%. We've made this digital transformation. We have created this digital media and information company of scale. And now we're at an inflection point. We're ready to go to the next step, which is really to develop very specific audience cohorts and customize our product and experiences to those audience cohorts based on what we know about them. As far as print goes, I don't see that changing a whole lot. We have been very smart and unnostalgic about right-sizing that business so that, you know, that 500,000 is down from probably a peak of 900,000 or so. But there remain a lot of interesting people, or people interested in receiving the magazine and our information in that format.
Mike, I don't have to tell you this. So there's been a lot of consolidation in the industry of late. You have Politico, you have the tires being kicked on Axios. Once you are public, do you view your platform as an acquirer?
Yeah, certainly we'll be looking at that. What we have, our promise to investors and to the street is this consumer conversion strategy. Again, we already have the very top end of the funnel, this very large 150 million audience across Forbes ecosystem. And so the investment thesis is more about making that conversion and having this additive new revenue stream on top of the very successful ad model that we have. But going forward, I mean, we're well positioned in a consolidating marketplace to take advantage of opportunities as they come up, and we will do that as well. And there are always opportunities out there.
Well, certainly looking forward to covering and following your public company journey. Forbes CEO Mike Federle, good to see you. Have a great weekend.
Thanks, Brian. Thanks, Julie.
Interactive Brokers is going to begin to allow crypto trading in a partnership with a company called Paxos. Let's talk more about this offering and what is expected from it. Thomas Peterffy is with us, chairman and founder of Interactive Brokers Group. Thomas, it's always great to see you. I got to ask, what was the holdup? What took you guys? We've had a lot of other companies get into crypto trading before now. Was there a particular obstacle or something that kept you guys from introducing crypto trading before?
Well, for a while we were casting about as to how to do it because, it depends on what kind of licenses you have and how long it takes to get them. And so it is not a very simple thing. But at the same time, many of our clients who manage well-diversified portfolios have been asking us to give them the ability to transact in cryptos. So the urgency just kept growing. Similarly, our registered financial advisor clients have been asking for cryptos for their clients. So it seems that nowadays, having a small percentage of your assets allocated to cryptos has become common wisdom. And this, in addition to many of our customers who want to trade the relationship between different tokens and the futures and other related assets. So, the interest is growing very quickly. And at the same time, we had to look for a way where we can offer very, very low fees, which is customary at Interactive Brokers. So we couldn't go with just anybody. So it took a long time to negotiate this deal. And so eventually we ended up with Paxos. And so we're able to offer the customary very low prices that you're showing on the screen there. And so it's for $1,000 trade, it's $1.80, and our nearest competitor is twice as much. And then it goes up from there. So we are at this time the lowest price provider in the space. So that took some time to to figure out how to do that.
Thomas, how difficult is it to launch a cryptocurrency trading platform when there really isn't any regulatory guardrails out there right now?
So that is a very serious issue, because we can't do anything where we later on the SEC or CFTC or some other regulator can come knocking on our doors and say that, well, you were not supposed to do this or that or the other thing, and so it's very difficult.
Thomas, how big a business do you expect this to be for Interactive Brokers?
Well, I that's very, very difficult to forecast. So we haven't done any work on that. We just understood that people really, really want us to do this. So why we had to do it. So I don't know. It could be maybe 20% of our business if we're lucky.
Thomas, have you become a believer in crypto? Do you own any in your own portfolios?
I have for some time. So I do own some cryptos and I do own some gold. And I must say that the cryptos have done much, much better than the gold. So, I mean, you have to prepare for the small percentage possibility or probability that things can fall apart, and at which time, if people, especially with all this crazy, issuance of more and more and more and more money, this deficit spending is, I don't know. I mean, people sooner or later could, I'm not saying they will, but could lose faith in paper money.
And so
in other places.
Yeah, it seems like, we're not there yet. I guess that is an eventuality, but I mean, are you adding to your cryptocurrency assets since you've been pleasantly surprised by the performance?
I haven't added lately, but it's always a possibility, and now there's a simple way for me to do it. And so up until this time, up until last Monday when we started this, it would have been very complicated, as it was the first time when I bought it.
Now you can buy it on your own platform. Thanks so much, right, Thomas. It's great to see you. Thomas Peterffy is chairman and founder of Interactive Brokers Group. It is always really fun to talk to you. We appreciate it.
Torrid is coming off another solid quarter, a few months removed from IPOing in July. Second quarter sales rose 34% from a year ago, while adjusted operating profits surged 153%. Shoppers rebuilt their closets with post-pandemic looks. Joining us now for an exclusive chat is Torrid CEO Liz Munoz. Liz, good to see you again here. The IPO feels like yesterday, but clearly it wasn't. Look, we're in the fall season. What are you seeing consumers shop for?
I think our customer in particular is shifting from a very stay-at-home type of wardrobe to starting to look for wear-to-work pants, blouses, dresses, things that are going to start to transition her into what she hopefully is the next phase of her life.
And Liz, it's Julie here. We've been hearing from some fashion retailers that there's sort of this excess in terms of the style that people are looking for. Not only are they getting out of the house, they're getting out in a big way in terms of the style that they're looking for, sort of over the top. Is that what you guys are seeing also?
Yeah, our customer is not quite so over the top, but she is looking for color. She's looking for optimism. I think dresses for the holidays this year are going to be exciting and colorful for sure for her. So I think that's how she'll express it.
Liz, last time we talked a little bit about your company's push into intimate apparel. Any update there?
Yeah, it's going beautifully. We have some patent pending bras that are absolutely extraordinary. The business has been growing, as you know, even though the plus size business is enormous and it's growing at twice the rate of straight sizes. Intimates is growing even faster than that, and our growth outpaces that as well. So our business has been really good. We are using intimates to really create sticky customers. A customer that buys a bra is far more valuable than one that doesn't. So we're using our loyalty program to make sure that we usher all of our customers into our bras.
Talk to us about customer acquisition, Liz, because as you said, this market is so huge and so really unaddressed or under-addressed, I guess we could say. You guys are addressing it, obviously. So how are you reaching out to new customers, and how are you, obviously you're still investing some of your proceeds from your listing. So talk to us about that.
Yeah, so finding new customers is an absolute priority for us, because even though Torrid is a billion-dollar business, we have 31% brand awareness, and we have just around 4% of the addressable population of customers we could have. So our mission is really to use influencers. We're doing an ambassador program. Our stores are an extraordinary way of acquisition. And then we're really barreling after digital concepts. As we prove them out, we invest more money in them, and shifting away from things like mailers and retentive type behaviors. Because once we buy our customer, we don't need to keep purchasing her over again.
Mm-hmm.
Liz, also since we last spoke, one of I would say one of your rivals, Gap, they have gotten into the plus size apparel market. Any concerns about them taking some market share?
Yeah, you know what's funny is they did not go into the plus size apparel market. They have been, Old Navy's been in the plus size apparel market since 2004. So what they did is brought the extended size range into their stores. So for me, they've been around forever. And I'll give you a good example. If you think about year after year after year that big companies have announced we're going into plus size, and everyone gets very worried, we have gone on to have a great year thereafter many times before this. So what I think Torrid does is very, very special and very differentiated. That said, I will remind you that there are 90 million possible customers in this country, so that are wildly underdressed and underserved.
Point well taken. Also, too, big market. Clearly, consumers are out there shopping at your stores, but are you able to get them the inventories they want? There's been a lot of disruption in the apparel supply chain, most notably coming out of Vietnam. Are you seeing any disruptions in your supply chain?
Yes, we are, for sure. We are seeing anywhere between 2 to 4 weeks delays or disruption. As you know, Vietnam has been closed for a period of time. They were supposed to open a couple of days ago. They've extended. Here's the really good news for Torrid. We do not have the typical retail business where Q4 is this big, enormous event that generates 60% of your profits. Q4 for Torrid is like every single other quarter for us. So it's not the same need or challenge to gear up inventories like most other retailers are seeing.
Liz, I want to switch gears a little bit because it is Hispanic Heritage Month that just kicked off this week. You, of course, are a Latina CEO. There still aren't enough female CEOs. I'm guessing that you're the only CEO that we talked to who has blue-purple hair on that front as well. But talk to me about on the Latin front, please, about how to get more diverse folks in the pipeline and up to the executive ranks.
Yeah, I think about that a lot because I have been told I am the only Latina CEO currently running a public company in America. And that was pretty shocking to me when I heard that. I think that we need to make sure that we are raising young Latina girls with all the aspirations of everything that they can be. I think it starts there. And then I think there needs to be more mentorship. I did not realize how grave the situation was, but now that I have, I'm pretty motivated to make sure that I get involved in mentoring and in helping more young girls dream of something beyond what they currently know. As a first-generation American, I will tell you, I certainly did.
Liz, are there any programs you can put in place inside of Torrid to help move that along?
Yeah, so Torrid has a foundation called Torrid Strong, and its entire mission is to help women. So we have actually been partnering with the YWCA, and that has been an unbelievable program. And we do other charitable functions. So yes, our focus is on young women, and the YWCA in particular services a lot of young Latina women as well.
Well, new cryptocurrency could help budget shortfalls in the city of Miami. On Monday, the city's commissioners approved a plan to accept crypto donations made through crypto mining platform CityCoins. The currency, known as MiamiCoin, has generated more than $5 million for the city in just a matter of 40 days. Let's bring in the mayor of Miami. We've got Francis Suarez joining us today. Mayor, great to talk to you again. I guess just as some background here, it's important to note that every time somebody mines a Miami coin, the city gets a 30% donation. You've said you've seen that number tick up pretty quickly. Why go this route?
Well, we want to be the most innovative city on the planet. And we also realize that for us to get there, we have to differentiate ourselves. We're not the Goliath in this equation. We're the David, and we're quickly growing in terms of the amount of venture capital and the amount of assets under management financing firms that are coming down and moving down in Miami. But we identified crypto as an area where we could really show how innovative we can be as a city. And so, we're the first city to begin the process of paying our employees a percentage in Bitcoin, allowing our residents to be paid in Bitcoin. And now with MiamiCoin, what we're doing is potentially creating a currency that a percentage of the mining is automatically going to the city. As you said, it's going to redefine how cities are funded. It's not an involuntary tax. We're not relying on philanthropy. This is part of a protocol that anytime a MiamiCoin is mined, a percentage goes directly to the city. And the amount that it has generated is incredible. It's generated, I think it's $2,000 every 10 minutes at this particular pace. $5 million in 30 or 40 days, that could generate $60 million over the course of a year. And if this gets, continues to be successful and grow, it could pay a significant portion of our budget, which is something that has never really happened in the history of cities.
And Mayor, I wonder if you can elaborate on that a bit more. There's obviously the innovation element to this. We know you've been out front very publicly trying to really get the city to be at the forefront of cryptocurrency. But I wonder how much of this was actually born out of need because of some of the budget shortfalls that Miami's faced. Does it provide a cushion? And if that's the case, do you see other cities following at a time when they're also struggling with their budgets on the back of what's played out during the pandemic?
Well, I can guarantee you that other cities are going to want to copy this model. In fact, I know I've gotten calls from mayors, even from cities in Silicon Valley, that have said, "We can't believe this. The mayor of Miami is creating his own currency." But I think what's great about it is that it's providing real world benefits to our residents. The money that's generated, we hope to be able to put into educational opportunities for our children to be able to get the jobs that we're generating. We've generated 8,000 jobs with an average salary of $120,000 in the last 9 months alone. We can pay our police officers, our firefighters. We can do anything within our general fund budget that we need resources for. And like I said, as the market cap of MiamiCoin continues to grow, the amount of resources that it's going to generate will as well. And it has never happened this way before. And so I think this is going to create a national model that people will look at as a different way of funding our government.
Yeah, Mayor Suarez, it is interesting to watch all of this play out. And the funds here, it sounds like it's going to be, sold into dollars when the city plans to tap it and use it. So, there is that in terms of restrictions still being restricted to dollars. When you look at kind of the attraction, though, beyond the money bringing it in, as Akiko's kind of talking, attracting companies to Miami. I know blockchain.com, when we were down there for Bitcoin Miami over the summer, they announced they were shifting half their headquarters to Miami. I mean, what have you seen in terms of new companies relocating down there, specifically in the blockchain space?
Wow, we've been so many. Like you said, blockchain.com, you have eToro, you have XBTO that just recently moved to Miami and and actually took the naming rights for Inter Miami soccer team. Of course, famously FTX, which did a $200 million deal to rename the arena. So we've seen such a movement, like you said, the Bitcoin conference, which came from LA and is now in Miami. It's one of the major, Bitcoin conferences. But we haven't just seen crypto companies; we've also seen finance companies. And just this week alone, CI Financial, enormous investment management firm out of Canada, moved to Miami, $300 billion of assets under management. So this narrative of the new Miami and a city of innovation is one that is becoming a reality more and more as you see the pipeline of deal flow growing by a large factor, and you see big finance companies moving as well.
Yeah, I mean, it is interesting because you guys are obviously very progressive and on the cutting edge here in the States, but the state of Florida, at the state level, we've heard maybe some pushback from Governor DeSantis when it comes to kind of vaccine mandates. And I'd be curious if that's kind of weighed on maybe some of that, and particularly you as mayor, the threat from him to fine local governments $5,000 for each time there is a violation of that vaccine mandate at the local level. I mean, how much pressure does that put on you as a mayor in Miami?
One of the things that we've done very successful in Miami is actually get people vaccinated. I was looking at a statistic this morning. It was almost hard to believe that 98% of our eligible population has received at least one shot. And so, we are heavily vaccinated in Miami. It's part of the reason why now, thankfully, our numbers are coming down significantly. But, we do see, and I have said this many times before, this is a pandemic of the unvaccinated, right? I fought very, very hard with the, alongside private companies like Norwegian Cruise Lines and the cruise industry and Disney to fight the state's efforts to impose on those private companies an inability to make sure that their passengers and their employees are vaccinated. And so, I think that those kinds of things where the government is telling the private sector what to do are not things that are helpful to private enterprise. And I think that private companies should have the right to be able to protect their employees and their customers.
Mayor, let's talk about something else you've been very outspoken about, and that is climate action. You've been a big vocal proponent of it, not just working with mayors in the U.S., but leaders around the world. And yet there's growing concern about the carbon footprints of cryptocurrencies, and particularly the use of energy that's required to mine crypto. What do you say to those who say that your embrace of crypto and this push for it runs counter to some of the other actions you are pushing for in trying to rein in the carbon footprint?
Well, I would tell them to do their homework because first of all, a lot of the ESG concerns of miners has to do with the fact that the large percentage of mining was happening in coal-producing countries like China and Russia. What we saw with China shutting down mining is actually a lot of that mining coming over to the United States, which is being done predominantly by ESG compliant companies. In fact, Core Scientific, which is the largest Bitcoin miner in the United States, is carbon neutral. It's a carbon neutral Bitcoin miner. They get hydroelectric power and they pay for offsets. So they are completely carbon neutral. So, the mining companies in the United States are very conscientious of ESG concerns and are making sure that to the extent that they are mining, they're doing it in a responsible way vis-a-vis the environment. And that's why I'm so excited to see America getting more involved in mining, because we're doing it the right way as opposed to other countries that are doing it the wrong way.
And of course, there are those who say that mining will actually be supportive of the expansion of renewable energy. So both sides to that debate. Great. For sure. Mayor Suarez, it's always good to have you on. Really appreciate the time today.
As part of our ongoing coverage of Hispanic Heritage Month, we're shining a spotlight on the representation of the Hispanic community at Fortune 500 companies. Joining me now is Javier Palomarez, President and CEO of the U.S. Hispanic Business Council. So Javier, I was looking over some statistics and they're pretty sobering and a little shocking. Just 2% of CEOs in Fortune 500 companies are Hispanic. Tell me why you think that is, and also what are the numbers like in other C-suite positions and on company boards?
It is kind of sobering when you look at it, Alexis. Only 3% of individuals in the C-suite are of Hispanic descent, and yet Hispanics make up almost 20% of the workforce in corporate America. Our association, the United States Hispanic Business Council, is about calling attention to that and pointing out to corporate America that, their boardroom, their C-suite needs to be more reflective of the reality of the American public. And when you look at the American public, the overall Hispanic population, Hispanics are the fastest growing segment of the overall U.S. population. There are some 62 million Hispanics in America as we speak. And we make up about 20% of the overall population. And in fact, according to the latest kind of census data, it indicated that more than 52% of the overall growth of the American population came from the Hispanic community. So we're certainly present in terms of the consumer, the client, the customer, but we're not present when it comes to the C-suite, and certainly not when it comes to the boardroom.
And I want to talk more about that, because when you look at the numbers, Javier, Hispanic workers are a big part of the economic engine that keeps America humming. I saw that Hispanics have the highest employment rate, I didn't realize this, among American men age 16 to 60. So there's a work ethic there. Tell us why that's not translating, or why you think that's not translating to the upper echelon of business and to the C-suite.
I think there's a blind spot there. I think that when corporate America thinks about diversity, they think in black and white. When they think about inclusion, they think in black and white. And that's a good thing. I think African Americans have done an admirable job of letting their presence be known and demanding, appropriately so, that corporate America change and be more reflective of their community. It's now time for Hispanics to speak with one voice, in a collaborative fashion, in a way that we can help educate corporations and say, hey, listen, we make up a good portion of your client base and your customer base. It's appropriate that we show up in your boardroom, we show up in the C-suite. There is definitely a blind spot, but that's part of the challenge, and one that we are happy to take on and collaborate with corporate leaders and talk about the potential that exists within my community. You talked about the employment rate amongst males, adult males in this country. The most employed adult male in America is Hispanic. The employment rate for Hispanic adult males is 80%. For white males, it's 70%. And for African American males, it's 65%. So clearly, we're contributing. We will make up about 80% of the new entrants into the workforce over the next decade. And so it's appropriate that we work with corporate America to ensure that the doors of the C-suite are being opened to us, and that the boardroom is being made available for all the Hispanic talent that's out there, ready and willing to participate, collaborate, and help grow the economy.
So you're with the U.S. Hispanic Business Council. Tell me some ways that you are trying to sort of strengthen the bond between your members and those in the business community, and to gain them the access they need, because that's really part of the equation, is it not, Javier? It's a lot of these folks don't even have the access to begin to climb the ladder.
You hit the nail right on the head. The reality of it is that all aspects of American life rely on Hispanic participation, whether that's entertainment or politics or commerce. Our workforce, our purchasing power, our viewership, our votes are necessary and coveted. It is appropriate now that we as a community come together and begin to demand the change that's necessary, that I think is good, frankly, for corporate America. And that means that our association, may have to engage in issues that may be controversial at times, that may be political in nature, that may raise the proverbial eyebrow from time to time. But our argument is one that's based on facts and data. The numbers are all good. This is a good news story. This is about a community that continues to contribute, to give back to this nation, to serve this nation. It's only appropriate that we be given an opportunity to participate at the highest levels in corporate America, and frankly, everywhere else. As I mentioned earlier, our entrepreneurial community is hard at work. We are starting ventures at a rate of 3 to 1 when compared to the general market. And right now, there are more than 4.4 million Hispanic-owned firms in this country that collectively contribute over $750 billion to the American economy. And I always say that while we are proud to advocate on behalf of men and women who happen to be of Hispanic descent, we never forget that we are first and foremost American businesses. So every tax bill we pay, every product we manufacture, every service we provide goes to benefit the American economy. It's only fair and right now that we come together as a community and demand the change that we frankly think is good for the American economy and certainly for corporate America.
All right, Javier Palomarez, President and CEO of the U.S. Hispanic Business Council. We appreciate your time today.
Just around 28 minutes to go until the closing bell, and you're still looking at selling across the board. Dow, S&P, and NASDAQ all in negative territory. The Dow off 193 points. Biggest laggards in the Dow today: Dow Inc., Caterpillar, Apple, Microsoft, and Goldman Sachs. Those 5 stocks, the worst performers. You're looking at Dow Inc. off just over 3%. Caterpillar and Apple, both those stocks off nearly 2% today. In terms of the sector action, biggest losses that we are seeing in materials, communication services, and technology. Well, investors are closely watching the developments out of D.C. President Biden this week defending his plans to increase taxes on the wealthy and also raise taxes on U.S. corporations while looking to drum up support for his economic agenda. We want to talk about the latest developments, and for that, we want to bring in Representative Kevin Brady. He's a ranking member of the House Ways and Means Committee. And Representative, it's great to see you again. Thanks so much for coming on. So since we last spoke, we got this plan from the House Democrats on exactly how they plan to pay for Biden's spending plans. And that includes the corporate tax rate, raising that to 26.5%, imposing a 3% point surtax on people making over $5 million, also increasing the capital gains taxes. I guess, what's your reaction to this and what the Democrats have put forward?
Yeah, this is very bad news for the U.S. economy, both in the short term and in the long term. There's very few businesses that go unscathed here, from the corporations that compete around the world to Main Street businesses. Certainly investors get punished in here. I think overall, looking at the rates and their impact, we estimate up to 3 million U.S. jobs could be killed, or many driven overseas, sort of going backwards to the bad tax code we had before, where U.S. companies certainly couldn't compete and were inverting, moving the headquarters, jobs, manufacturing, research overseas. So we think, especially as our country, fights to get back on our economic feet, this couldn't come at a worse time, and it's very damaging.
Apologies there, Representative. I was muted. So let me start this over, because we also heard from Senator Manchin this week. He's one of the Democrats that are opposed to that $3.5 trillion reconciliation package that Democrats are pushing. He's looking for something that's in the ballpark of $1 trillion to $1.5 trillion. I guess if we do see that number come significantly lower, is there any hope or any chance that some GOP members could be on board with that?
Well, no, there won't be. One, I think it is encouraging for Senator Manchin to set a lower number there. But look, there's no excuse to be raising the corporate tax rate while 10 of our global competitors have lowered theirs. Redesigning our international code to frankly favor foreign companies and workers over U.S. ones doesn't make sense. There is about 5 different tax hikes on Main Street businesses. Bottom line is, these are very damaging tax hikes. It doesn't make sense for the U.S. to surrender economically to our global competitors, especially right now. So no, I don't see any Republicans joining this. The question is, there are about 16 Democrats in the House who run as Main Street moderate Democrats. We'll see if any of them step forward, because certainly you can't vote for these tax hikes and hold yourself out back home as a Main Street moderate. It just is incompatible.
There's also the key retirement provisions that are included in this $3.5 trillion reconciliation bill. And among some of the changes in there, there's a requirement for many businesses to offer a retirement plan for their workers. It would also make changes to the savers credit. Supporters of this are saying that this would be a huge step forward in closing the retirement gap. I know you don't support this. Why not?
Well, actually, Chairman Richie Neal and I did introduce and pass out of the committee a bipartisan retirement to savings bill, Secure 2.0, the built on our success of the reforms from last year. We did not, though, include a mandate on businesses 6 employees or larger to have that offer that retirement plan. It is, I think, burdensome and very difficult for small businesses to comply with. Also, I think it makes sense to have incentives for businesses of all sizes to offer these plans. Our bipartisan bill helped local businesses, especially small ones, match the first $1,000 of contribution, made it cheaper for them to offer these plans. So we believe the bipartisan approach the committee's already approved is far superior to this. This retirement mandate, by the way, is only one of 2 national federal mandates on business. The other one, to offer paid family medical leave, structured and run through the IRS, is the other mandate as well. We think that one has some real problems as well.
And then also a big issue, you guys are very, very busy down in Capitol Hill these days, is a debt ceiling. And I know we're expecting a vote in the House over the coming days. There's been some fighting between the Republicans and the Democrats just in terms of whether or not this should be addressed and how I guess, it should be addressed. Where do you stand on this?
Yeah, so I just spoke with Secretary Yellen yesterday. I agree with her that it is important that we pass this debt ceiling. You don't play games with this. As I told her, two key points here. One, it's important, I think, for Senator Schumer not to tie this to the funding for the government. I can't believe at this juncture in a fragile recovery that you would raise the stakes politically that high. That really doesn't make sense. Secondly, Democrats haven't had a conversation with us all year on any of these key issues. Our thinking is they must be wanting to go alone again. If they were serious about bipartisan support, as I told Secretary Yellen, bring forward a plan. We can't keep spending trillions of dollars after the emergency is over and hope to retain our financial footing. We need some guardrails that really returns us to normalcy, begins to put some safeguards on government spending related to the economy, a really smart way to get our financial feet on the ground over time. So I'm urging her to bring forward a proposal where we can have these discussions.
Well, Representative Brady, it's always great to speak with you. Thanks so much for taking the time to join us. We've got about 17 minutes to go until the closing bell, and a couple of stocks that are on our radar here, movers in the final couple minutes of trading. First up is FedEx. Now, UBS today slashing their earnings estimate on the stock. And you can see the stock slipping as a result of that, with shares off just around 1%. Now, UBS is saying that rising wages and also the tough hiring environment right now will hurt FedEx's bottom line. Their fiscal Q1 results are expected next week. Now, this stock has been under pressure, at least more recently. Over the past month, it's down just around 7%. I'm going to flip over to some of those reopening plays that are catching a bid today. Carnival, Royal Caribbean, Norwegian among the winners today. You can see the outperformer is Norwegian, with that stock up just over 2%. Some optimism here that the worst fear COVID scenarios for the fall may not come true. So we're seeing some investors buying some of these names. Airlines, some of the airlines today are also among those moving to the upside. But again, you're looking at gains here of the 3 major cruise lines today. Carnival up just over 1.5%, as well as Royal Caribbean. Norwegian, the outperformer today, up just over 2%. Now, the resurgence of COVID cases is slowing the rebound that we have been seeing in travel. A new report out from the American Hotel and Lodging Association showing that hotels projected to end the year down $59 billion in business travel revenue. So we want to talk about what this means for the industry. And for that, we want to bring in Chip Rogers. He's American Hotel and Lodging Association President and CEO. Chip, it's good to see you. Some alarming numbers here from your most recent report, and certainly a reminder that the hotel business has a long way to go in its road to recovery. But I guess how significantly has the Delta variant slowed the rebound that we had been seeing in the travel sector?
It has hurt, no question about it. And it's important to remember that in our industry, more than half of all the revenue is generated from what you would consider to be business-related travel, whether it's an actual business meeting, a conference, or a convention. And those are the things that have really been hurt most by the Delta variant, because once those business trips are canceled, and particularly the conventions and conferences are canceled, oftentimes they're not rescheduled until next year. So unlike leisure travel, when a business trip goes away, it goes away for quite some time.
When do you expect the business sector, the business travel sector to come back? Is this something that could see a large uptick within the next year? Is this something that maybe will take a couple of years, or something that won't ever get to those pre-pandemic levels likely again?
No, we'll get back to the pre-pandemic levels. We expect it to be back looking like 2019 by the end of 2023. And so that's clearly a long ways away, but that's the normal path if we don't have significant ups and downs with variants. It's the variants, of course, as you mentioned a moment ago, that really caused this fourth quarter collapse that we're seeing right now. And if we have another major variant hit sometime during 2022, we'll probably see another retraction. And that is very damaging for this industry.
It certainly is very damaging. We know the business travel sector is so important when it comes to hotels. Those that are navigating this well are doing so successfully. What are they doing?
Well, first and foremost, they're in a location that is catering to leisure and outdoor activities. If you look at places like Florida, even places like Texas and Arizona, doing exceptionally well. You know, from a policymaker standpoint, one thing to keep in mind is that when people plan travel, they're looking oftentimes months in advance. So if you're sending signals about I'm open, I'm closed, I'm up, I'm down, oftentimes they just won't plan that trip. And that's really why Florida has done such a good job in this recovery. If you look at the hotels in Florida, whether it be Miami or Tampa, even to a lesser extent Orlando, they've really outpaced the rest of the country in most places.
Does the sector need more help or help, I guess, in general, because the hotels largely haven't really received too much funding from the federal government? Do they need assistance at this point, and what would that look like?
No question about it. And really the assistance that we're advocating for is assistance that would go directly to hotel employees. The Safe Hotel Jobs Act, which we've had introduced for quite some time now, could really save a lot of the industry if it were to pass. And so we're certainly pushing for that. But if you think about kind of the pace of what has happened, early on there was PPP funding. There was a lot of flexibility from lenders, and hoteliers just kind of limped along. But if we go back to a point where there's no PPP funding, there's very little flexibility from lenders, and there's no direct assistance, you could see a lot of hotels close for good. And many of those will be in your urban city centers where most of the jobs are generated.
Speaking of jobs, though, I guess some hotels are seeing a demand for their business. We have read time and time again that many of these companies are having a hard time finding the workers that they do need at this point in the recovery. From the CEOs, from the executives that you are speaking with, are they having a tough time finding the workers that they need?
No question about it. Now, it's felt more in places like Florida, vacation spots, than it is in places like New York City that rely on that business travel and that international travel. But it is across the board. I mean, this labor situation it's quite difficult. We've never seen anything like this before. That's probably going to change as hotel demand begins to wane in the fourth quarter. But the problem will still exist. It was here before the pandemic. It'll be here after the pandemic.
And Chip, you mentioned some of the strength that you're seeing in a state like Florida. Outside of Florida, though, when you look across the U.S., where are some of the other areas where hotels are actually doing okay?
Anything that's not attached to what would be considered an urban setting is actually doing pretty well. So your limited service hotels, Clearly, your resorts and places that offer outdoor activities, those are doing well. But what's interesting is there's been an enormous separation between the top 25 markets and the rest of the industry. In fact, just off last week's STR data, the top 25 markets in the US were down about 32% in revenue, and the rest of the markets outside the top 25 were really flat and even, and that's compared to 2019 numbers. So it is those urban settings that have been hurt a lot.
Chip Rogers, great to speak with you, American Hotel and Lodging Association President and CEO.